Good morning everyone and welcome to Morning Markets. Today we're going to look at UK inflation and what that means. So the main focus for the market participants here in the UK today is certainly on the UK inflation rate. If we cast our mind back to last month, there was an expectation that we would see inflation fall, materially so, fall back below that 10% level. That didn't occur and we ended up with inflation last month coming in at 10.4%. If we look at where we are today, again that expectation that we would see inflation move below 10%. Unfortunately, I'm here with some bad news. That wasn't the case. The economists, the forecasts that we've seen have been proven wrong again, and the UK inflation rate has remained above 10%, coming in at 10.1% year on year for March. In large part, there are two things going on within the inflation readings that we're seeing, and it's not just specific to the UK. We're certainly seeing the impact of falling gas, falling energy prices that spiked so significantly last year, and that's feeding through into lower prices in that side of the inflation debate, if you will. On the other side, unfortunately, as we'll all be experiencing with our weekly shop, we're seeing prices of food and food-related goods continuing to increase. And that was really the main point of the data for March, that why that inflation didn't come down as much as expected. Looking back to last month, food price inflation was around 18.1%. If we look at this month, food price inflation above 19%, so 19% year on year. And that's very significant when we think about the impact that that has on overall disposable income levels. It certainly also brings it to the fore from the Bank of England's perspective that, yes, inflation has come down from the peak, but not at the speed that we've been expecting. And as we look forward into the second half of this year, as we annualise out those large energy price increases, we should see more significant falls in inflation. But it likely does mean that we will continue to see the Bank of England move forward with interest rate increases, moving from the current level by another 25 basis points, taking the UK interest rate to 4.5% when we get to the May meeting. Also, just other things from markets yesterday, continue to get results from US banks in particular, and really they're not showing any significant signs of stress at this point from the problems that we did see in the US banking system in March. So that's a positive to take from the results so far that we're seeing there. As we look to the day ahead, we'll get some more company reporting data, but we'll also get inflation data for the Eurozone. I'll leave it there for today, but please do join us again tomorrow. Many thanks.